thank you very much for being here today. We spoke 12 months ago, and I was just joking with you saying your crystal ball worked very well, and we're very keen to see what the crystal ball is saying for the next 12 months. But before we go to that point, when we look at the global scenario, we have elections going on in the US, Europe very slow, China just announced a few weeks ago a heavy package trying to revive the real estate industry and their economy, conflicts in the Middle East. It's quite chaotic. And global investors, they don't like uncertainty. How do you see India in the scenario? Because the more I read, the more I see India growing on the eyes of the global investors. Can you explain us the situation for us?
Thanks, Gustavo. I think we did speak 12 months back, but I think a lot of things have changed. And but as far as India is concerned, from a global perspective, India is still in a steady spot as an emerging economy, as I see. What are the main things going for India today, as you asked me, is like that we are right now moved to the fifth spot as a global economy, and we should be, because there are $3 trillion of GDP, they are at the fifth spot, and we should go to the third spot in the next, say, 3 to 5 years at 5 trillion or 6 trillion as the compounding goes, because we are growing at a 7% GDP growth rate. Now, that's because India is part of the developing emerging economies of the world, and there is so much more to do. And infrastructure and real estate contribute close to 30 to 40% of the GDP, and both in terms of real estate development and services put together across all asset class. Now, I'm positive. There are global shifts happening in terms of the Ukrainian conflict, followed by this current conflict that's happening and destabilizing the world. So obviously that's going to have an impact on oil prices, and then our inflation will turn around. I think as we're talking, there are at least 40 countries going through government change and elections, and that's going to impact. And obviously some of those impacts will also be felt by India. But the good part is the domestic economy, as I see, has become a little bit robust. As I see the amount of inflows going into the stock markets, amount of inflows going to the real estate investment, and the couple of REITs that have been launched and doing well in the Indian context, backed by the real estate assets. So if you have to connect the dots, I think global interest and global institutional and private equity interest in real estate in India is growing, backed by the reduced opacity and more digital interventions, adding to the regulatory laws being more simplified and like RERA coming in place. And on the infrastructure side, we are building 10,000 kilometers road every day as we speak. Yeah. And so the infrastructure story is coming together. The interest rates are currently in favor of the Indian markets, and foreign institutional investors looks to make an opportunistic return on the Indian real estate story. And there is so much of more demand to fill the country, streets, cities. And the second important theme that is going to play out is the urbanization theme that I see. And that's like demand is moving from tier 1 cities where there is lack of land, and then moving to tier 2, tier 3, especially post-COVID. And you can see that in the next, by 2030, I think more than 40% of the Indian population, which is close to 600 million people, having homes in tier 2, tier 3 cities and working out of there. So consumption-led theory, younger population, and global capability centers getting built in India, all of this is going to contribute towards development of these urbanized towns and cities across India, which means there is going to be real estate and infrastructure growth. So I see that irrespective of the things happening right now around the globe, India still is in a sweet spot for the next 10 to 15 years in terms of a growth story around this asset class. And I see the real estate industry going to a $1 trillion in terms of by 2030, which is 6 years from now.
That sounds very interesting. And I have been to India in the last 12 months 4 times already, and I can see that with my own eyes. But what could go wrong? Sometimes things go wrong. Is there anything that would worry you, anything that could go wrong that a global investor is probably paying attention to, or if somebody's penetrating the market in India, they should be very careful about?
See, India Where currently it stands, I think there are few things which still take time, and probably it has taken longer time than other economies and countries to change, like acquisition process, approval, and obviously a lot of things that go around with the establishment. Things can um, the expectations of people because the market shifts that's happening. So while I think India is I would call India to be at a stage where you're talking about the baby boomers of in the US in the 1990s and 96 and 2000. So India is getting more younger. So your productive population is going to be much larger. But then along with it comes also the market shifts. So whether you build for long term, like something like COVID happens, will the sustainability factor in will play much larger role in especially a dense populated country like India, and that is something that a global investor should keep looking out for. Second is also the ease of doing business. For all that you have said, it's still better and things have been institutionalized, but you still need to work with people in Indian context with reputed and consolidated developers to be partners with. So at platform level investments, I think India is a great story, but you need a local development partner who will take you uh, and help you with the operational excellence on the ground and be able to leverage their capabilities on land acquisition and approvals. So I think that is something that a global investor should look at. Apart from that, yes, India has always been subjected to, if there is a uh, inflation or a currency adjustments that's happening in the global level because of all this global turmoil. I think definitely that should have an impact in the Indian context. But will that impact be unsurmountable? The answer is no. I think India should be able to be on the track of a robust economy. And I'm surely looking forward to the next 10 years. And I see the digital transformation and use of AI, etc., the manifestation is largely Indian, even abroad. Even if you talk about the tech entrepreneurs running a lot of initiatives in the US, it's Indian. So it lot of things, and the global capability center question that came up like in the morning, I think GCC will also drive the growth of real estate and infrastructure in the Indian context because most of them will be based out of that. And post-COVID, while China plus one story didn't span out very aggressively, it has played out. So a lot of manufacturing global bases are progressively shifting into the Indian context. And that's also giving rise to the Indian asset class in the industrial and logistics segment. So office space, retail with successful REITs happening because of the consumption theory in India, because of the younger population, and the warehousing, industrial and logistics supply chain hub shifting to India, and also the manufacturing hub. I think these stories are all now coming together. And if all these three stories come together, I think you may have upheavals, which will be short term, like all these conflicts. The interest rates could be high. You could always wish for a better bond markets, deeper bond markets. But I think those will all play off as you keep going along. So I think FDI will be positive on India, foreign investors, because they'll obviously get more bang for the buck adjusted for the currency, still in the Indian context for the next 10 to 15 years.
When I speak to some of our members in the US and in Europe especially, they I feel that they always have the impression, or they still have the impression of the India of back 2005, 2010. I have been coming to India since 2010, and the last 14 years the change is huge, right? A lot of things have changed. And one thing I tell them, the global investors, of the private equity funds and in different places that are allocating capital, maybe in Latin America, maybe in Asia, is that in India, as they probably know, the need for the global investor is not the same as it was 10, 15 years ago. Of course, in India, we are open to receive global investors and etc. But the domestic market became very strong, and the domestic market understands very well how India works. So it's a tougher competition for somebody who would like to penetrate the market now than it used to be 15 years ago. Do you agree with that, or there's room for everyone?
No, your point is valid, Mustafa, because I think the domestic institutional market and investor market has become much more stronger. That there much more capital available for domestically being deployed. And the fact is right, the domestic capital understands the domestic market and thereby is able to invest directionally. Because there is always a comfort zone. I understand the Indian market, so let me put my money. I understand the risk and rewards. But I think even foreign investment, and especially the likes of Blackstone and Brookfield and CPPIB, they have been investing in India for the last, so they have become more local. And they bring in global standards of evaluation. Now their evaluation parameters have become that much more stronger and thicker and very deep that they understand the Indian markets like the domestic markets can.
And they have proven the liquidity is here.
Yes.
There's no problem with exiting, right?
Exit. Yeah, the liquidity is there, but there is still large room, and there is a specific room for. The only difference is the global investors used to chase office assets, and like they didn't chase residential assets because it was yield asset vis-a-vis capital gain asset. I think that market perception will change because even residential assets, there is going to be huge demand, as I see in there. There is still more homes required. Maybe mid-segment and luxury segment will be the larger play in residential markets for the foreign investors. But that play still exists over and above the commercial office market grade A. And I think industrial logistics and warehousing assets are going to be a very sticky asset. But they will also follow the low-hanging fruit play for yield asset play for foreign investors. They will continue to stick to these two asset class, and maybe retail is the next new asset class that they are looking at given the consumption-led economy. And probably selectively they will do some residential assets. So I think there is enough room for the foreign investor and the domestic capital to play because India's so much. And the growth rate targets that you are given to India to become a 5 trillion economy in the next 3 to 5 years itself means that you're talking about a 7 to 8% GDP growth, which means there are that much more investment and that much more exits also can happen for the foreign investors.
Very insightful. Thank you very much.
Thank you, Gustavo. Thank you for giving me an opportunity to be able to share my
pleasure.
thoughts. Thank you.